QCOM has been making moves, huh? Up, down, sideways. It's a roller coaster. But is this a buy, or is this just a pit stop before another drop? Today, we're digging deep into Qualcomm to find out if this tech giant is truly poised for liftoff. Okay, so what's the buzz around Qualcomm right now? Well, the word on the street, and certainly what we're hearing from industry experts and reports like that CNBC article, is all about Qualcomm's big push into AI at the edge. We're talking about their AI 200 and AI 250 chips making waves in automotive and IoT. The narrative is that QCOM is successfully diversifying away from its traditional smartphone dependence, leveraging its robust intellectual property and chip design prowess into these high-growth areas. There's also the underlying story of intense competition from giants like NVIDIA and AMD, especially in the broader AI chip space. But for QCOM, the focus is squarely on that edge AI. Management seems to be echoing this, really highlighting their success in these new ventures and their solid foundation in the non-Apple QCT business. All right, for those new to the show, let's quickly get you up to speed on Qualcomm. This company, founded back in 1985 in sunny San Diego, is a foundational player in the wireless industry. They've got three main segments. QCT, which is their Qualcomm CDMA technologies, basically where they develop and supply integrated circuits and software for all things wireless, comms, networking, multimedia, you name it. Then there's QTL, Qualcomm Technology Licensing, which is all about licensing out their massive patent portfolio for 3G, 4G, 5G, and beyond. And finally, QSI, Qualcomm Strategic Initiatives, where they invest in early-stage companies across industries like 5G, AI, automotive, and IoT. So they're not just making chips, they're also investing in the future of tech. Management's guidance, which we'll lean into heavily, is consistently pointing towards sustained growth in their automotive and IoT sectors powered by their AI at the edge strategy while maintaining a strong core in their non-Apple QCT business. Now, this is where we earn our stripes, folks. We take that market narrative, we compare it with Qualcomm's own guidance, and we bake it into our scenarios. The market is excited about AI at the edge and diversification, and management is confirming that excitement with their projections. So, how does that translate into potential fair values for QCOM? First up, our base case. I'm giving this a 50% probability, and here's why. We're assuming Qualcomm successfully executes its diversification strategy, hitting those management targets for automotive and IoT revenue growth, especially with their AI at the edge initiatives like the AI 200 and AI 250 chips. Their core QCT, non-Apple business, with those Android flagships rocking Snapdragon 8 series, keeps chugging along with moderate growth, and QTL revenues stay stable. The market recognizes this steady, diversified growth, giving it a stable PE multiple. Now, for the technical influence on this probability, the stock has recently broken out of a multi-week channel. While it's currently retesting that $189 level, if it holds, it suggests underlying positive momentum that strongly supports this base case outcome. So, starting with current FY25 EPS at 1037, we project FY26 EPS growth at 12%, reflecting that strong auto/IoT growth and increasing AI smartphone adoption, even with a more mature handset market overall. That gives us a projected FY26 EPS of $11.1644. We then apply an assumed PE multiple of 18.1x, which essentially maintains its current market valuation for diversified growth. Crunching those numbers, our base case fair value comes in at a solid $210.22. Next, our bull case. This is our optimistic scenario, and I'm assigning a 30% probability to this one. Why 30%? If Qualcomm truly knocks it out of the park, significantly outperforming in AI at the edge, rapidly expanding market share with those AI 200/AI 250 chips in automotive and IoT, that's going to drive higher revenue growth and margin expansion. Imagine Snapdragon AI smartphones becoming the dominant force, pushing up ASPs and volumes. Plus, a favorable regulatory environment for QTL. The market would then re-rate QCOM as a leading AI innovator, justifying a premium PE. Technically, if QCOM makes a sustained move above that 189 level and starts heading towards 210 and 230 resistance, that would be a very strong confirmation of this bullish momentum, bumping up the chances for this scenario. Here, we project a more aggressive FY26 EPS growth of 18%, reflecting accelerated AI adoption and those market share gains. That puts our projected FY26 EPS at $12.2366. With that re-rating as a premium AI growth stock, we'd see a PE multiple of 21x. This delivers a bull case fair value of $256.97. Wouldn't that be nice? Finally, our bear case. Now, we always have to consider the downside, and I'm giving our bear case a 20% probability. The reason for this lower probability is that while competition is real, Qualcomm's current strategic shifts and technical signals lean more positive. However, if we see intense competition from NVIDIA, AMD, and others really hit Qualcomm's market share and margin growth in automotive and IoT, or if the smartphone market takes a deeper-than-expected dive, severely impacting QCT handset volumes, that would be tough. And let's not forget potential regulatory or IP challenges for QTL. All of this would decelerate growth and sour market sentiment, leading to a de-rating of the PE multiple. From a technical perspective, if the stock fails to maintain above $189 and instead breaks below supports at $179 and then $165, that would definitely signal a downtrend and increase the probability of this less favorable outcome. In this scenario, we assume a much slower FY26 EPS growth of just 4%, reflecting significant competitive pressures and a market slowdown. This gives us a projected FY26 EPS of $10.7848. With a D-rating due to slower growth and increased risk, we'd see a PE multiple of 14x. Our bear case fair value lands at $150.99. It's important to be prepared for all outcomes. All right, let's pull up the chart. Here's what I'm seeing, folks, based on our technical deep dive. QCOM has actually broken out of a multi-week channel. That's a strong signal. The key right now is if it can maintain above that crucial 189 level. If it does, then we're looking at the next resistance levels at $210 and then $230. However, if it doesn't hold, our supports low are at $179 and $165. So, that 189 level is a really important pivot point we need to watch closely. So, is this a buy for Qualcomm? Based on our weighted scenario analysis, 50% base, 30% bull, 20% bear, and factoring in the current technical breakout, I'm leaning towards yes. The bottom is likely in, at least for now, assuming that 189 level holds. Qualcomm's strategic shift into automotive and IoT, coupled with its AI at the edge initiatives, seems to be gaining serious traction. The market narrative and management's guidance are aligning, and the technicals, while needing confirmation above 189, are showing promising momentum. I see QCOM as a compelling buy for investors looking for exposure to diversified semiconductor and AI edge computing growth. Given our analysis and considering that crucial 189 level, I'm feeling good.
Technical level, if it holds, I'd be looking at entry points around the current price, potentially accumulating on any retest of the 189-190 area if it shows strength there. Our base case fair value of $210.22 and bull case of $256.97 suggests significant upside from here. Keep an eye on that 179 support if the 189 doesn't hold, as that could offer another interesting level. What do you think, gang? Are you bullish on QCOM's AI future, or do you see more challenges ahead? Let me know in the comments below. Don't forget to smash that like button, subscribe to the channel if you haven't already, and hit that notification bell so you don't miss our next deep dive. Now, remember, this is all for informational and entertainment purposes only. I'm not a financial advisor, and this isn't financial advice. Investing involves risk, and you could lose money. Always do your own due diligence, consult with a qualified financial professional, and consider your own financial situation before making any investment decisions. This analysis is based on current information and my interpretation, and market conditions can change rapidly.